Right then, so next question is question number 126. It's Windsor and it was examined in June 2012. The part which is relevant for part disposal, the topic which we have seen, very first topic that we have seen in our this lecture, the topic which is relevant for part disposal is part B of this question. Let's read this. Let's read this topic. This question. On 3rd of December 2016, Ronaldo sold 2 acres of land at auction for gross proceeds of £92,000. The auctioneer's commission was 5% of the sales price, which means that it is a selling cost, so it will be incidental cost of sales or selling cost. It will be deducted out of it. Ronaldo's wife's father had originally purchased 3 acres of land on 4th of August 2002 for $19,500. He died on 17th of June 2009 and the land was inherited by Ronaldo's wife. On that date, 3 acres of land were valued at $28,600. Ronaldo's wife transferred the land to Ronaldo on 14th of November 2012. On that date, 3 acres of land were valued £39,000. The market value of unsold land as at 3rd December 2016 was £38,000. Right? So in this question, we have to use the formula of A over A plus B, which means market value of the piece of land which we have sold divided by value of the asset sold plus the remainder value of the asset. All right, so by using that we can calculate the capital gains tax on this one. Right, so please make sure you redo this, please make sure you try to do this question. It's just a small question and it is relevant to A over A plus B, part disposal one. Right, so let's read from the notes now the remaining parts. We are doing the shares now. The shares part is very, very easy, but it is a lengthy process to calculate the shares as far as F6 is concerned. Our examiner won't examine in much detail because these are just time consuming. There is not much skill needed in them. So these are very, very easy, to be fair with you. So when we sell some shares, we take sales proceeds, but how will we deduct the cost? So there is a certain way to deduct the cost. So we'll take number of total cost divided by number of shares, that is cost per share. So whatever amount of shares we have sold, we'll have to deduct the cost according to that. But the problem arises because when I am selling the shares, I am selling, say for example, 100 shares, but altogether I had 1,000 shares. I bought them 1,000 shares gradually. I once bought 200, then I bought 300, then I bought 100, and when I was buying at different timings, I was purchasing them at different prices as well. However, when I am selling them shares, I am selling at a fixed price of all of them, which means we have to take a realistic amount of cost. So how can we do that? So while calculating the cost, we have to see a few things. Let's see. We'll have to make the share pool, he says, consist of all shares purchased before the date of disposal. 2 tracks are maintained. One is number of shares and other one is cost. When shares are sold, then cost of the shares in the share pool is apportioned according to the number of shares sold in the pool. After that, it says matching rule on the sale of shares. Shares sold will be matched in the following order. So when we have sold the shares, we will use this order. So we'll take the amount of sales. However, when we are deducting the cost, we will use this order. So shares purchased on the same day as the selling day. So if we have purchased any shares on the same day, we'll use that cost. Shares purchased on the following 30 days. After that, we'll use this one, and in the last, we'll do shares from the share pool, where we will be listing all of the shares, which does not come in other two. Right? Now, what is right share? If you have passed F3, you already know what is right share. if I hold some shares in a company, the company will give me preference, so they will give me rights share, right? So that is called right share. Obviously I will have to pay for that. Now if the company give us bonus shares, so for bonus shares we do not have to pay anything. Likewise, when we are making the share pool, if we bought any rights shares, we will put the amount in there. However, if we bought any bonus shares, although we will put shares under the shares section, but the cost is going to be zero for bonus shares because we won't be paying anything for bonus shares, right? And another topic is takeover and reorganization. If shares are replaced with another company, say for example, if I hold shares in A PLC and A PLC was took over by B PLC, then the B PLC will say, give me back the shares which you already hold in A PLC because we have took over the company. Now we will give you shares in B PLC. Excuse me. So that is called takeover and reorganization. If the shares are replaced with new holding due to reorganization or takeover, and then the cost of previous shares are apportioned to the new holding using the market value of new holding. Next one is quoted shares gifted. When quoted shares are gifted, the sales value for the capital gains purposes is going to be the lower of these two, right? So what is a lower of these two? We will take the lower quoted price plus the difference between a higher quoted price and lower quoted price, and the second is highest market bargain and lowest market bargain, whatever the average of that is. So average of marked bargain, so we'll use that one, whichever is lower of these two. That is the way to calculate the capital quoted shares, capital gains tax on the quoted shares, right? Please mark this one important, which is quoted shares. We'll do a question on that as well. I will just point you out which question you have to do on that. Now capital gains tax for companies. Now companies capital gains tax is very easy than the individuals one. So we'll just take the sales, then deduct the incidental cost of sales. Net amount is going to be our net proceeds. Deduct the enhancement expenditure, and after that it is going to be our unindexed gain. Now what is indexation allowance? Now individuals get the annual exempt amount, but companies do not get any annual exemption of 11,100. Companies get what is known as indexation allowance. Now it is basically based on the level of inflation in economy. So the question will tell you that what is indexation allowance. So it is not a worry. So deduct the indexation allowance, and after that indexation allowance on expenditure as well. So we'll take the indexation allowance on the cost, and then we'll deduct the indexation allowance on the enhancement expenditure. And after that we'll deduct the current year's capital loss, and we'll deduct the capital loss brought forward as well. So while deducting the capital loss brought forward, we will not care about annual exemption amount anyway, like we used to do for individuals, because there is no annual exempt amount for companies anyway. Now in most cases indexation allowance will be given to you. If it is not given to you, there is a way to calculate it, and the most important way is the last one, which you can see, which says index factor. Now most likely you will have to do this one, which says RPI, retail price index in the month of sales, or latest one, RPI in the month of sales, and RPI in the month of purchase, divided by RPI in the month of purchase. So that is the way to calculate the indexation allowance. Now retail price index on the date of sales and on the date of purchase will be given to you in the exam, so you do not have to worry about it. Sometimes because there will be lots of transactions in the question, so the examiner will tell you the different indexation allowances, so you do not have to worry in that case either. Now say for example, if we have been buying shares, I bought some shares today, I bought some shares after 3 months, I bought some more shares after 4 months. Because the time is increasing every day, so there will be inflation as well, so there will be impact of inflation. So examiner will give you indexation allowance for every date. So we will take the latest date less the earliest date divided by earliest date, so that is the way to calculate the indexation allowance in that case. Disposal of shares for companies will make one column, which is FA 1985 pool, Finance Act 1985 pool, in which we'll write down the number of shares cost and index cost, And indexation allowance, it says, is updated by index rise, adding indexation allowance at each operating event. Now what is each operating event? As I said to you earlier, whenever I am selling the shares or buying the shares. So for example, if I bought some shares now and after 3 months, after 1 month, because it is a time difference, so there will be inflation as well. Likewise, indexation allowance will be calculated after every operating event. Finally, when shares are sold, then the cost and indexed cost of the shares in the share pool are apportioned according to the number of shares in the pool. Right? We will look at the reliefs in our next video. Let me just show you a question which you have to do. I only asked you to do the part B of this question. We have to do the part A as well, so please make sure you redo this question and the previous question as well, which is 125. The question which is relevant to this shares bit is question number 127. In fact, 128, sorry. 128 part B is relevant to for the shares. So please make sure you redo this question as well. So it is relevant to this part. Right? So that's it for this video. And I will see you in the next video, and then we will see different reliefs which are available. One of the reliefs we have already seen, which is entrepreneur relief. Remaining reliefs we will see in our next video, which are available on capital gains tax. Right? Thank you very much and goodbye.